and welcome to our live session today with Peter. So, what's new in the markets?
Well, we had a number of financial data yesterday which took the markets by surprise. However, I would be highlighting the US ones, which were for December. We had the retail sales growth rate, which dived deep into the negatives. We had also an industrial production growth level, which also dived deep into the negatives. And I would be noting that also the PPI rate slowed down more than expected. So overall, we had data which more or less tended to imply that there is a contraction in economic activity for the manufacturing sector. There is a weakening of the demand side of the US economy. And inflationary pressures seem to be slowing down. Other than that, I would be noting also on the fundamental level that we had initial rising for the time being. It's still a little bit under the radar, but there seems to be a small political crisis building up in the US. And the main issue here is the debt ceiling. It seems that the US government has reached the ceiling of borrowing allowed, and it will require practically allowance from the US Congress to actually be able to receive more debt in order to meet its financial obligations. Now, there is a catch here, and the catch is that the House of Representatives is practically controlled by Republicans. And it may prove to be difficult for the US government, for Biden's government, to actually be able to get consensus out of Congress. There may be some issues which will have to be given back to the Republicans in order for them to allow for more borrowing. Other than that, I would be noting that we had an edging lower of the US dollar. We were expecting actually that there would be an even wider drop. That didn't happen. I would note that there may have been some safe haven inflows for the USD.
Were US stock markets on the retreat yesterday as well?
Yes. We had a clear bearish sign. We had all three major stock market indexes, the Dow Jones, S&P 500, NASDAQ, all three of them were in the reds. And I would say that it was the first clear bearish signal after a number of days of rise. It was edging higher, edging higher, edging higher. Yesterday, there was a clear drop. And I think that probably the adverse financial releases yesterday tended to increase market worries about the path, the outlook of the US economy. That would be one. However, we have to see that also in conjunction with the earnings releases, which were released practically on Tuesday and on Wednesday, where we had a number of companies which missed especially the revenue figure expectations. So overall, that tended to create a more bearish sentiment for US stock markets. Mind you that today we are highlighting the earnings report, the releases of Netflix and Procter & Gamble. So that's going to be interesting to watch, especially Netflix and the number of subscribers of Netflix. I would be noting though that on a more general view, there may be slowly but steadily a more cautious market sentiment building up, which could provide more safe haven inflows for the USD, while on the other hand, riskier assets such as commodity currencies or even stocks could suffer a little bit.
What about the monetary fund?
Well, yesterday we had a number of speakers. I would be highlighting two which showed exactly the contrast between the statements which were made, as we had some mixed signals. The one would be Cleveland Fed President Mester. She stated that practically Rate hikes of the Fed seem to be working as inflationary pressures are easing. Now, the surprising element from this statement is actually Mester herself, in the sense that Mester was always considered to be more hawkish, consistently more hawkish. And to hear a hawk that there is a relative satisfaction that rate hikes have worked and that inflationary pressures are easing, that's something a little bit out of the ordinary. On the flip side, we had St. Louis Fed President Bullard. He stated that the bank should continue on a rapid rate hike path, and he even discussed that he would be open to the idea of another 50 basis points rate hike. That would come into contrast to the market sentiment and expectations for a possible easing of the Fed's aggressiveness. It's characteristic that the market currently is expecting a mere 25 basis points rate hike in the next meeting. And overall, I would note that consensus seems to be building up within Fed policymakers that probably the bank should start easing on its hawkishness somewhat. Overall, though, there are still mixed signals coming out. I would like to see also today's speakers how they will be practically discussing and placing themselves for inflation.
Mm-hmm. And what's on the calendar for today?
Well, we had already from Norway, Norges Bank's interest rate decision. I would also note that we had ECB President Christine Lagarde, which has made some statements. She's expected to talk again later on. I think the highlight, though, not the highlight, I would be noting, though, the interest rate decision from Turkey, from CBT, from the Central Bank of Turkey. Now, the bank is expected to remain on hold at 9%. That by itself is already an issue, in the sense that we have inflation running high in Turkey, and definitely keeping rates at 9%, which for Turkey is relatively low, that could build up more inflationary pressures within the Turkish economy. And the situation could worsen even further should the bank proceed with a rate cut, even 25 basis points rate cut. That could provide some bearishness for the TRY.
And how about the American session?
Well, the American session is going to be a busy one. We're getting from the US, I would be noting definitely December's building data. We have the number of building permits and housing starts. The building permits are expected to rise slightly, the housing starts to drop. We're getting some mixed signals if the actual figures are realized. We would be getting some mixed signals about the US construction sector, but overall I think that could weaken the US dollar. I would also be noting the weekly initial jobless claims figure. Now, it's expected to rise and could imply, if actually so, that slowly but steadily a slack is building up in the US employment market. I would also be noting the Philly Fed Business Index for January. Now, it's expected to improve yet to remain in the negatives. I would be noting here, though, that we had already the New York Fed Business Index, which dropped deeply into the negatives, showing a contraction of economic activity in the wider New York area. Should that be repeated also for the Philadelphia area, that could intensify market worries about the path of the US economy. Other than that, I would be noting from Canada the wholesale trade growth rate, and oil traders may be on the lookout for the weekly EIA crude oil inventories figure. Last week, we had a substantial rise of US oil inventories, implying a slack in the US oil market. Should that be repeated, we may see some bearish tendencies for oil prices.
Mm-hmm. And during tomorrow's Asian session?
During tomorrow's Asian session, I would be highlighting one release, and that would be Japan CPI rates. Therefore, December. The core rate is expected to accelerate further, reaching 4% year on year. It's a substantial issue for two reasons. A, the rate has been accelerating over several months now, I think about 11 months. On the flip side, and that's the second element, is BOJ's monetary policy stance, which, given the latest interest rate decision on Wednesday yesterday, the bank maintains its dovishness practically intact. And that could add more pressure on inflationary pressures to actually rise even further.
And finally, any speakers about monetary policy?
Well, in the American session, I would be noting from the Fed, Boston Fed President Collins and Vice Chair Brainerd. It will be interesting to see how they will be commenting, especially about the monetary policy outlook, the economic outlook of the US, inflation. I would also be noting from ECB Isabel Schnabel. I think Schnabel will be maintaining a more hawkish approach, which could provide some support for the euro. And in the American session, in the Asian session tomorrow, I would be noting New York Fed President Williams. The New York Fed is the largest Fed branch practically, and Williams always had an additional weight in his comments.
Thank you, Peter. Stay tuned for our next live session with Peter.
Welcome to the technical analysis part of the presentation for today. My name is Peter Yusuf. I'm the senior market analyst at IronFX. In front of your screens, you have the US dollar index for our chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Now, with no time to waste, we see that the USD index practically edged a little bit lower, but overall the sideways motion is being maintained. We tend to keep our sideways bias intact for the time being, despite note how the price action dropped testing the 101.3. There was a nice reaffirmation of the validity of the support level. Should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the 103.05. Note that we would require a higher peak than this one. And that would pave the way practically for the 104.55, a level which provides and rests on these peaks here. On the other hand, should the bears take over, given also that we have the RSI indicator, which remains close to the reading of 50, but it's dropping. It's actually at 44 right now. And should that downward slope be continued, that may intensify the bearish sentiment of the market. And in that case, we may see the price action of the US dollar index dropping. I would require a clear break of the 101.30 resistance line, support line, in order for me to adopt a bearish outlook. thus opening the gates for the 99.55 support level. It is. Let's move on to Euro USD. Adjusting the chart. Euro USD, which maintained its sideways motion, which was highlighted also by the breaking of the upward trend line. We tend to maintain our bias for the sideways motion to continue. Note how the Bollinger Bands have converged and narrowed. That's another indication that we had low volatility for the pair. Also, I would note the RSI indicator, which seems to continue to revolve around the reading of 50. Now, currently it's a little bit higher. It's at 53.7, but nothing conclusive. On the contrary, I think that highlights the relative indecisiveness of the market about the pair's direction. Should the bulls take over for any given reason, and then I would expect Euro USD to rise. I would require a clear break of the 1.0935, which could allow the pair to start aiming for the R2 1.1055. On the other hand, should the bears take over, I would expect the price action to drop, break the 1.0730, and thus start aiming for the 1.0580. For the time being, we expect the sideways motion to continue. Any price action within the boundaries of the R1 1.0935 and the S1 1.0730 could be considered in that range, in our opinion. Let's have a look at cable. Readjusting the chart. Note the correction lower and the relative stabilization of cable. And it's interesting in the sense that we had a number of releases which more or less failed to excite traders. There is one which I would like to have a look at, and in particular that would be yesterday's release of the CPI rates, which showed a slight slowdown of headline CPI rate from 10.7 to 10.5. Let's unlock the chart, move backwards, and have a look at the time of the release. It's interesting how the cable jumped around 36 pips at the time of the release of the US financial data. That would be the retail sales and the PPI rates. It weakened the US dollar, allowing the pound to jump against the USD. Here we are. In an even wider market reaction, we see that GBP USD rose at the moment of the release of the CPI rates by 30 pips. And I think that was a clear indication that despite the slowdown of the UK CPI rates yesterday for December, it remained unconvincing. And CPI rates are still at very high levels for the UK economy. Locking in the chart, readjusting back to the 4-hour chart. There we go. For the time being, we note that the RSI indicator is slowly dropping. And if that continues, that would be further confirmation, if you prefer, that the bullish effect is slowly fading away. And that may allow practically the pair to remain in a sideways motion, maybe even correct a little bit lower. Yet for us to abandon a bullish outlook, we would require clear breaking of the upward trend line here. And the initial reaction would be the switch from bullish outlook in favor of a sideways movement possibly with GBP/USD remaining between the R1 1.2345 and the S1 1.2220. Mind you though that the very low volatility observed during today's European and early European and Asian session do not seem to allow for wide volatility. So for the time being, sideways motion expected. Maybe even some slight bearish tendencies, but nothing much here. Let's have a look at USD JPY. It was an interesting pair. There was a wide contrast of the market sentiment. Note how the pair rallied with the release of BOJ's interest rate decision, almost reaching 131.80. However, later on dropped, broke the 129.30 once again, broke below it, and seems to be stabilizing below it. Definitely we will have to switch the 129.30 from a support line to a resistance line once again, as it was before. Let's go hunting for a new ultimate support line. Let's unlock the chart. Going back, let's look for a very convincing throw or even a prior resistance line which could provide further clues about this one. Definitely this one. I'm picking this through here and this one. Why? Instead of, say, for example, this one. In our opinion, these had more confirmations. You had 1, 2, 3. Practically had 2 to the downside and 2 to the upside. And that would be the in green, please. 122.35 support line. Locking it in. Let's correct also the labels. Readjusting the chart. Placing the labels once again. And it's not something which is just for the fun of it. We're correcting the labels because the labels could easily provide you with a good picture of the chart's movement without much hassle and ease on your trading style. 129.30 being placed as the first resistance line now, given that it has been broken to the downside. New support line would be placed at 127. Second support line at 124.75. And final support line at 122.35. Let's lock everything in. So given that the price action has surrendered any gains it had made during yesterday's Asian session and seems to have stabilized. Also note how the RSI indicator has remained close to the reading of 50. Both of these elements tend to imply that the sideways motion between the 129.30 resistance line and the 127 support line seems about to continue. So we maintain our bias for the sideways motion to remain. For a bullish outlook, I would once again require the price action to rise, break above the 129.30 resistance line, and start aiming for not even testing the 131.80. On the flip side, should the bears take over, we may see the price action dropping, breaking the 127 support line, and start aiming for the 124.75 support level. Let's have a look at USD/CHF. Let's readjust a little bit the labels. USDCHF being the second safe haven currency pair we're looking at after USDJPY. Now there are two interesting elements here. The first interesting element is the drop of USDCHF as low as to hit on the 0.1990 support line. It's characteristic how the S1 was able to hold its ground and push the pair's price action back upwards, which stabilized. I think we will be getting a clearer picture here once we drill down to the 1 hour chart. Here it is. See the downward movement, the testing of the 0.1990, a reversal, and the stabilization. So for the time being, we tend to maintain our bias for the sideways motion to continue. It's a very tight range-bound movement. On the other hand, some bearish tendencies cannot be excluded. Note that the RSI indicator is at 38.6, which is pretty low. So the bears do not seem to have left the scene quite yet. So a stabilization, some bearish tendencies could be present, and should the bears actually take over, I wouldn't be surprised to see the price action dropping, breaking the 0.1990, and start aiming for 0.8940. That would allow us also to draw a downward trend line. Mind you that a number of the boys up in the research have mentioned this, which it's a possibility which should not be neglected. We have a series of lower peaks and lower troughs. However, in my opinion, for me to adopt a fully bearish outlook, I would require another trough, and it should be lower than this one. So practically for a bearish outlook, once again, the price action has to drop and clearly break the 0.1990 support line, which held its ground yesterday. On the other hand, should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the 0.9210 resistance line, and start aiming for the 0.9330. Okay, let's have a look at commodity currency pair AUD/USD. Wide drop. It's an interesting movement for a number of reasons. But before we move on and actually start commenting on it and discussing it, we have to make some corrections here. And definitely the S1 will have to change into a resistance line. Drilling to the 1 hour chart, down to the half hour chart, drilling to the minute chart. Let's widen this. The price action over the past 20 minutes or so has broken below also the 0.68, which also provided some resistance here. I'm going to be changing the S2 as well. Back to the 4 hour chart, turning the 0.6880 into resistance line. So now we will have to locate two new support levels. There's an interesting throw here, which I'm going to be keeping. and that would be in green, the 0.6585, putting it in. And I would like to see another true, and it would be this one. It's a little bit off, a little bit further down the road, but the validity of this true, this peak here, I think it's valid. Okay, I'm keeping that. And that would be in green once again, the 0.6385. Let's readjust the chart, make the necessary corrections on the labels. Starting with the R3, which is now being placed at 0.7130. The R2, which is being placed at 0.7010. The R1 at 0.6880. The S1 at 0.6740. And the S2 at 0.6585. Plugging everything in. So we have here two very, very, very interesting elements. The first is that the price action was able to break below the upward channel we had drawn yesterday. So that forces us to switch our bullish outlook. The question arises, okay, is it going to be a sideways movement or a clear bearish downward movement? In our opinion, the fact that the price action has also broken below, just below, the 0.6880 support line now into resistance, given also that we have an RSI indicator which is pretty low at 35 and dropping, that tends to imply also bearish sentiment, allowing practically for the downward motion to continue. Overall, we tend to switch our our bullish outlook in favor of a bearish outlook this time. And small word of warning here, watch how the price action has dropped, hit the lower Bollinger Band, and is actually flirting with it over the past 16 hours, 12 hours. So that would be an indication that the pace at which the bears are moving here is going to be slowed down. You can see that already in the last 3 candlesticks. So I think we may see some relative stabilization, a slight correction upwards maybe even, but overall the bearish sentiment I think is still present and it's going to be guiding the pair even lower, possibly aiming for 0.6740. On the flip side, should the pair be on the rise and the bulls take over, once again, we may see the price action rising, breaking above the 0.6880 clearly, and start aiming, if not even reaching, the 0.7010. It's a very, very interesting chart, and in my opinion, the bears seem to have it here. But you never know, do you? Let's go back to USD CAD. Actually, not back. It's the first movement. Nice upward movement. Also nice how the pair has approached and seems to be respecting right now the 1.3525 resistance level, but the R1 has to be changed into support line. Locking it in. Let's go hunting for a new ultimate resistance line. This is too close to the price action for my opinion. On the other hand though, no, way too close. This one's better. Why is it better? Because you have one touch and the second touch here. Could be a little bit lower. Not too low. Keeping that. Okay, that would be the, in red, 1.3850. Okay, let's locking this in. Widen the chart a little bit. Let's correct the levels as well. Okay, the R3 now is being placed at the 1.3525. The R2 at 1. Sorry, small mistake here. The R2 at the 1.3395. And the R1 at 1.3230. Used to be support line. The S1 is being placed at 1.3095. Sorry guys, my mistake. I have practically reversed all the labels. Let me correct them once again. We make a start with the S3, which is being placed at 1.3095. The S2 is being placed at 1.3230. The S3 is being placed at 1.3395. The R1 is being placed at 1.3525. The R2 at 1.37. And the R3 at 1.3855. That's it. Once again, my bad, sorry for the mistakes. Let's lock everything in now. Steeper rise. We tend to maintain a bullish outlook practically on two reasons. A, definitely the steeper rise of the USD CAD. However, I would also note there is an indicator which is actually just below the reading of 70, also implying a bullish sentiment within the market. Small word of caution here. Note how the price action was able to break above the upper Bollinger Band and corrected by stabilizing, getting just below it once again. So I wouldn't be surprised to see some stabilization before any further ascent higher, which could push USD CAD above the R1 1.3525 towards the 1.37, a level which provided resistance successfully once, twice, 3 times here. So that's pretty valid. On the other hand, should the best take over, which does not seem to be the case for the time being, but it's still a probability and should be covered. Should the best take over, we may see the price action dropping, and I would require a drop below the S1 1.3395 before actually calling in the bears here. Let's have a look at US stock markets. I would make a start with Nasdaq. It's the 4-hour chart. Let's readjust a little bit the levels. And please allow me to drill out from the 4-hour chart to the daily chart. And there's a good reason why. The reason is, note how there was an upward movement of 1, 2, 3, 4, 5, 6, in my opinion 7, 8 candlesticks in a row. There was a slight consolidation of the price action here that was Friday, but there was a decisive drop yesterday. It was the first decisive red candlestick, which signaled that practically the upward movement was interrupted. And that forces us to practically switch our bullish outlook back to the 4-hour chart. Now the next big question is, what's next? Is it going to be stabilizing? Is it going to be a sideways movement, say for example? Or are the bears actually taking control here? The big question, I think, would be more relying on the RSI indicator. There's a clear downward movement of Nasdaq, of the of the index, and the RSI indicator is currently at 40 and dropping. So the bears are slowly but steadily taking over, and I would expect the price action of Nasdaq to drop below the 11,300 support line and start aiming for the 10,970. Should it reach the S2, that would be a substantial bearish scenario in my opinion. On the flip side, should the bulls take over, not probable but still a possibility and should be covered, then we would expect a reversal of the downward motion, a testing initially of the R1 11,735, higher peak than this one, and a break above it. Nothing less would be enough for me to actually adopt a bullish outlook here. Once again though, for the time being, we expect the bearish sentiment to continue to guide the index and dropping it even lower below the 11,300 and start aiming for the 10,970. Let's have a look also at gold's price. A very nice stabilization of gold's price between the 1928 and the 1880. Actually, the price action is even narrower. It's characteristic how the Bollinger Bands have converged and remained narrow, an indication of low volatility. Also, the breaking of the upward trend line tends to signal that there was a change of trend over the past 48 hours, and the precious metals price now is moving in a sideways motion. Note also how the RSI indicator has dropped, hit the reading of 50, and remained very close to it, which implies a rather indecisive market. So overall, all of that tends to point towards a sideways motion for the precious metals price, probably below the 1928 resistance line and above the 1880. Now, should the bulls take over for any given reason, say for example, further weakening of the US dollar could provide fundamentally such a push higher for gold's price, then I would expect the price action to break above the 1928 resistance line. I would require a higher peak than this one to be formed for me to be actually convinced that the bulls are taking over. But for a clear-cut bullish outlook, I would require consecutive higher peaks and higher lows. On the flip side, should the bears take over and gold's price starts to drop, I would expect a breaking of the 1880, a level which provided resistance, but given that the price action has moved decisively higher, has switched its role from a resistance line to a support line. Yet for the adoption of a bearish outlook for gold's price, I would require a breaking of the S1 and the precious metals price to start aiming for the S2 1824. Another one which we could have a look at would be WTI. Let me locate it. Here it is. Another steep drop of WTI's price. There we are. Let me some repositioning of the labels so we get a clearer picture here. Now we have a steep drop and a relative stabilization over the past 8 hours. We could see it more clearly if we drill into the 1 hour chart. Allow me please. Here it is. It's even supported here by the 200 moving average. So for the time being, we tend to maintain the view that the price action of WTI could be stabilizing somewhat. I would be noting though the release of the EIA crude oil inventories figure. Should there be another substantial drawdown, that could be feeding the bears for the black gold, and in which case we may see WTI's price dropping, breaking the 78 support line, and start aiming for the 73.60 support level. For the time being, the RSI indicator has dropped just below the reading of 50, but remains rather stable, which may be also an indication that the bears have not totally taken over the direction of the commodity. Last but not least, a quick glance at Dow Jones. In a similar picture, however far more intense than Nasdaq. You can see how the price action of the index has dropped, broken the 33,460. The RSI indicator is deep below the reading of 30, which on the one hand definitely showcases the dominance of the pair. On the flip side, it may be implying also that a correction higher may be in the cards for the index. So for the time being, we tend to maintain a clear bearish outlook for Dow Jones. However, we note here also that there may be a correction higher. Nevertheless, for the time, that would be a mere correction. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
In our previous video, we talked about various indicators regarding inflation. In this video, we will look at two indicators related to employment. The first one is the unemployment rate, which is probably the most widely known labor market indicator. It measures the number of unemployed people as a percentage of the labor force. It is lagging indicator, which means that it generally rises or falls when economic conditions change. When the economy is in bad shape and jobs are scarce, the unemployment rate can be expected to rise. When the economy grows at a healthy rate and there are lots of job vacancies, it can be expected to fall. The second indicator is the non-farm payrolls figure, NFP for short. This is a key indicator used primarily for the US employment market, although it is also used for other countries as well. It measures the change in the number of people employed during the survey's month, excluding the farming industry. Basically, the indicator measures the US employment market's ability to create jobs, which also has an effect on consumer spending. It is released on the first Friday of every month and is very closely watched by investors, as well as the Fed and other US policymakers. If the indicator rises more than market expectation, the US dollar may strengthen and vice versa. Note that the change in this indicator can be very volatile and could create a wider market distortion, as the ripple effects may also be felt in the US stock markets. Thank you for watching.
All right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular training chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings more than 80 will indicate the price is near its high, and readings that are above 20, so readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and an uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit. We are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case, we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we are looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Yeah, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right. So let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on the H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see that price has broke out of the channel. For Aussie dollar, let's look at 1 day chart. Very obvious, very nice channel. On the 1 day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candlewick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. right? So we are seeing that there's a chance where price will drop slightly a bit more, and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay. I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud, and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. You can see that there is a support and resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel, and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, an upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards a resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 2, 7, 2 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see is there any chance of divergence. No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. Let's do franc yen. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious, the nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support and resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry, 100% for entry as well. Very nice triangles. Yeah, that's about it for dollar cat. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on the H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. Cat yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep. So looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.